Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 5th, 2025, we're diving deep into the S&P 500, ticker SPY, to understand its recent movements and what lies ahead. First, let's contextualize the charts with the latest market news. Just yesterday, August 4th, 2025, the S&P 500, Dow, and Nasdaq experienced their best day since May, signaling a robust rebound. This surge was primarily fueled by renewed hopes for a September rate cut and a series of strong corporate earnings reports. Financial analysts are cautiously optimistic, with some even forecasting new all-time highs for the S&P 500 in August. However, it's crucial to note that prior to this rally, the S&P 500 had closed below its 20-day moving average for the first time since April, breaking a significant streak. This earlier dip underscores underlying volatility, even as the market shows strong signs of recovery. Now, let's transition to the charts to see how these events manifest in price action. We're starting with the one-day chart, displaying the full available data to grasp the broader trend of SPY. Looking back from March 2024, SPY has been in a clear long-term uptrend, consistently making higher highs and higher lows. This overall bullish momentum is a key factor for long-term investors. Notice the significant volatility periods, such as the sharp correction in early April 2025. This period saw a notable drop from the $520s down to the $490s, only to recover swiftly. Such rapid reversals often indicate strong underlying demand absorbing sell-offs, but also highlight market sensitivity. Fast forward to late July and early August, and we observe a similar pattern of a sharp but shorter-lived pullback. The lowest close during this recent dip was approximately $621.72 on August 1st. On August 4th, SPY recorded a powerful bullish engulfing candle, closing at $631.17, which directly reflects the strong rebound reported in the news. This recent price action suggests that immediate fear has subsided, with buyers stepping in aggressively. Let's narrow our focus on the daily chart to the period between July 28th and August 4th, highlighting the recent volatility. We can clearly see the sharp drop from the July 25th high of $637.10, accelerated by significant selling volume around the end of July. The price broke below the important $635 support level, which was retested as resistance on July 29th. The descent continued until the low point near $621.72 on August 1st, a crucial support level established by the cluster of lows in mid-July around $620 to $622. The rebound on August 4th, marked by that impressive 0.88% gain, effectively pushed SPY back above the $630 psychological level. This $630 level now becomes our immediate short-term support. For the bullish momentum to continue, SPY must overcome the resistance presented by its previous high around $637 to $639. A decisive close above this level would signal a potential continuation towards new all-time highs, as suggested by some analysts. To understand the intraday dynamics of yesterday's strong rebound, let's switch to the 15-minute chart for August 4th, 2025. Observe how the price opened near $625.67 and immediately started climbing with consistent green candles. The early hours showed steady upward momentum, with minor pullbacks quickly bought up. Volume picked up significantly during the midday trading session, accompanying the sharp moves upwards, confirming strong institutional buying. There was a notable push above the $628 and $630 levels, confirming these as key psychological barriers that were successfully breached. The chart illustrates a classic V-shaped recovery on an intraday basis, indicating strong conviction from buyers. The close near $631.17 on the daily chart was a culmination of this persistent intraday buying pressure. Traders should look for continuation above yesterday's high of $631.215 on an intraday basis for further bullish moves. Now, let's rewind slightly on the 15-minute chart to July 31st and August 1st to visualize the recent sell-off. Here, we see the inverse of yesterday's action, consistent red candles and a sharp breakdown from previous trading ranges. The heavy selling volume accompanying these drops indicates a strong bearish conviction that drove prices lower quickly. The breakdown below $635 and then the crucial $630 level shows where major support failed and turned into resistance. Notice the brief attempts to rally within this period were short-lived, failing to reclaim significant levels. This demonstrates how quickly market sentiment can shift, emphasizing the importance of respecting key price levels and volume indicators. The extreme low reached on August 1st at $619.29 served as a capitulation point before the latest rebound. Switching to the 1-hour chart, focusing on the period from July 15th to July 18th, allows us to analyze typical hourly price behavior. We can observe how SPY traded within a defined range during this time, generally between $622 and $628. The $622 to $623 area frequently acted as support, with bounces occurring when the price approached these levels. Conversely, the $627 to $628 area proved to be a strong resistance, as the price struggled to break above it on multiple occasions. These clear support and resistance zones are critical for short-term traders looking for entry and exit points. A breakout above resistance, especially on higher volume, often signals a continuation of the upward trend. Conversely, a breakdown below support, particularly with increased selling volume, can lead to further declines. Traders should always monitor these levels closely, as they provide high-probability areas for reversals or accelerations in momentum. So, what does all this mean for SPY in the short and long term? In the short term, the bullish case is strong, driven by yesterday's significant rebound, positive news regarding rate cuts, and robust earnings. The market has shown a clear appetite to buy the dip, with quick recoveries from recent pullbacks. A break above the $637 to $639 resistance level would likely trigger further buying towards new all-time highs. However, the bearish counterargument hinges on the recent sharp pullbacks as potential signs of underlying instability or profit-taking at higher levels. The fact that the 20-day moving average was broken, even if temporarily, indicates a shift in immediate trend strength. If SPY fails to break above $637 to $639 and loses the $630 support, we could see a retest of the $619 to $620 area. For long-term investors, the overall trend remains bullish, suggesting that pullbacks could be opportunities to accumulate. However, for short-term traders, volatility around key resistance levels like $637 to $639 and support at $630 and $619 to $620 will be paramount. A failure to hold $630 could lead to quick downside, while a clear break of $637 to $639 could lead to rapid upside. Always watch volume. Strong volume on rallies reinforces bullish moves, while strong volume on declines confirms bearish pressure. In recap, the important price levels to monitor are the immediate support at $630, followed by stronger support at $619 to $620. On the upside, the primary resistance zone is $637 to $639. The likelihood of SPY reaching new all-time highs in August is moderately high, perhaps 70%, if the positive news cycle continues and corporate earnings remain strong. Reinforcement for this would be a clear break and sustained trading above the $639.85 level with elevated volume. Conversely, if economic data disappoints or rate cut expectations diminish, a return to the $620 to $622 range is plausible, with a 30% likelihood. This scenario would be reinforced by high-volume selling and multiple daily closes below $630. Things to look for going forward include upcoming economic reports, particularly inflation data and Fed commentary, which could shift rate cut expectations. Also, keep an eye on corporate earnings reports from major S&P 500 constituents, as these heavily influence market sentiment. Remember, successful trading is about understanding these dynamics and reacting to the market, not predicting with certainty. Thank you for tuning in to Explain the Charts. Don't forget to like, share, and subscribe for more in-depth analyses.